Hey everybody, welcome to your daily update for Sol and BTC. So we are still dumping. If we look at the liquidity, I guess there's probably not a lot of point in actually trying to put a bottom on it, because as you can see, even with all of this dumping, the one-day liquidity just keeps relatively even because people just keep opening new positions. Everyone's sort of trying to catch the dip, and then they catch the dip of the dip, and then they catch the dip of the dip, and so on and so forth. But yeah, as it currently stands, it's probably down to 90k. I think if it does go to 90k, then you'll probably find that it'll be down to 88 or something lower. And to the upside, basically 98. If we look at the 1 day on Sol, it's getting down into that sort of 130 area now, and the upside is tapering off at about 146. So just what's been really noticeable just in probably about the last few hours particularly is that Sol really wants to push up. But people are only really starting to turn a little bit bearish now on BTC. They're starting to lose a bit of hope that it's ever going to go back. There's a lot of questions about, are we ever going to see 100k again, that kind of thing. So it's really not a lot of point in, even if this is a bear market, there's really just not a lot of point in running the price up, because ultimately, if people just keep buying, you might as well just go and keep liquidating. That's number one. And number two, if they are buying all of those liquidations, they need to be able to sell them into something, and the without there being really adverse spread against them when they go to actually close them. So that's kind of why you just need those shorts to pile in. So when everyone gets really bearish and all the money that has been built up and collected from all the liquidations in the dip would then create that bounce to the upside, and obviously it'll be into the liquidations of all the shorts. So there are targets in play. There is some really big structural moves that we've talked about over the last week or so. The thing is that the time frame on them is very broad. So when could it happen? It could happen now. We actually just landed on a very, very key level, which is 93,570, and that's the type of level that can send the price back to 104 to 106k on BTC. But it's also of such a time frame that it doesn't have to do it now. And it's also, it's the lazy entry of a hold level. It's got trend confluence, and all of those things. They don't always just stop there and then reverse. Sometimes what they'll do is they'll dive down and grab whatever liquidity they can from within that area and then go up. So, yeah, short version is if we're waiting for a reversal, it'll come when everyone really has given up. So that's and I don't think that's quite yet. Just looking at it. Looking at the 1 day liquidity, it's looking, there's a lot there to the upside, but as you can see, there's still plenty, 7 day, there's still plenty to the downside. Same sort of areas, 130 for Sol and 90s, low 90s for BTC. And if we look at the 30 day looks, because it's quite zoomed out, looks really one-sided. But if they were to dump down, they're still grabbing, another, what's that? Cumulative leverage, still about another $500 million if they went down to 90. And that's just on BTC, and they could go and grab, another 74 million out of Sol if they drop down to 130. So, that's there should be a bounce, but hey, it'll come when everybody finally stops. All right, let's have a look at these charts. Actually, I'll just quickly show you this. So for those who can see the screen, what we're starting to see now is, people are starting to believe that BTC is going to go down, and we're starting to see some of these pockets of leverage open up in close proximity to price. So people are betting that, they can take 100x short and chuck it in here at 94k for liquidation, which is a couple of $100 above where we are. And this is sort of what you want to see more of. And there's a lot of that, on Sol. And if you see how it's been sort of building on Sol ever since about 44, people sort of lost hope. But with BTC, it hasn't really been the same. Like, it's been going down into it, but it just hasn't really been forming. So, it pretty much went from 96.6k all the way down to about 94k before some people started to go, oh yeah, okay, let's look at shorting this with our liquidations at 95, 96, and it's not likely to reverse now that it's so close to taking all of these big positions down here, because these are 25x positions, so they would typically be larger amounts of money but just on lower leverage. Not that 25x is low, but you get what I mean. So we've got all that sitting there. We've got reasons to do retests in that area. We could bounce from where we are. It may just be up here to grab some of this, this 94 or this 95, 96 area. But yeah, as you can see, people are only just starting to give up hope on BTC. Okay, let's have a look at these charts. So starting with Sol BTC strength, it's still holding trend, so it hasn't broken it, but it also hasn't broken out of the downtrend either. So really, it's just in one of the sharpest down-facing wedges you could ever see, really. It can't stay like this forever, so it's either going to have to break further down to the downside, or it's going to have to break out and move to the upside. It is going to hard close a break level today, which is that 14641. And it's not such a big deal that it hard closes the daily break level. It's not quite the same as hard closing a daily origin level. We have got a range trend to be retested, which is down a bit further at about 14207, so we might get further downside to that. And we've got more break levels, etc. down there. So if it pulls back up by the end of the day and closes over the 14660, then that's a positive sign that they're looking at actually doing a reversal. Some of the structure here that happened, there was some really weird price action that happened today, and one of them in particular is that they've come up and they've actually tested this hold to the upside, just in that wick up and then down. So it's almost like they are gearing up for a reversal, but if it is going to be a reversal, it could be a quick reversal because they've taken out the resistance to the upside. So yeah, it's pretty hard to judge what they're totally up to, because they're not really breaking the trends and they're not really in a position to break out of the downtrend. So yeah, what do we got? 2 hours and 31 minutes. So 2 hours and 31 minutes, if it was to just, I mean, if it closed up, then, fantastic. You can see what their intention was, and that was just a mass capitulation. But even if it just sneaks up above the trend and gets up to about that 14566 level, then it's in a position to bounce. It's already taken out the hold level, so then it has to travel up to one of these upper levels, and it's already retested this break. Actually, sorry, it hasn't retested that break. So it would be potentially back into the 152 sort of area if it does bounce off here. Let's have a look at the weekly. And so the weekly is on the trends but underneath. So this is the type of price action that's made it very, very hard to make choices this week, because it's not actually breaking it. It's not really resistance. What is resistance is this level up here at 15982, which will get hard closed today. And what is resistance are these levels at like 167 and 165 sort of areas. Now, all those areas could even get retests, and that could actually be a rally. What we know is support is this range trend that's running through here, and that's sitting down there at about that 14106. And we've got a break level which we haven't hit yet on the weekly. So we've got kind of a situation where it could bounce off these, and then they could have all of their sell pressure loaded up on the backside of these trends, which are not technically broken, but doesn't stop them just saying, right, we're not going to get back up above that trend, and that's where they just start applying sell pressure again. Or they could let the thing go all the way up and do these retests. And it's not really any different to why BTC is going down now, because they let the price travel up really, really high without retesting any of the lower breaks that they broke through. So eventually it was going to go back, much like CME gaps sort of end up getting filled. But yeah, it really just depends on where it bounces and whether they let it go back immediately, or whether they want to keep pushing it down. The high time frame support on the weekly is all the way down here at 12780. So, that's a level that should definitely have some kind of bounce. It would potentially, it depends how it gets there. Like a fast wick down and a tag of that level is then a fast wick back up. A slow bleed down, like what they're doing, and when you when you look at this weekly close over here, it's very intentional that they slow bleed down. They stop just under the trend and then they open up so that they can reject off the backside of the range trend and then continue down. So, if that behavior continues, somewhere in the next 2 around 29 minutes, they're going to push this down, close just under this range trend, and then reject off the backside to go down. And if they wanted to really break the support down the bottom there, it'll be exactly the same thing. They'll slowly grind down to it, they'll sit at it, they'll wait for the close, they'll push under it, tag the backside and dump. So that's the kind of price action you're looking for if you just are looking for continuation to the downside. It's kind of medium positive the way it's sitting here now on the weekly, because it's tagged the prior broken trend, which is just where that wick is hit just there. It's sitting above these supports. If it opens the next candle, if it does dip down to that support, it does have the ability to at least bounce. So whereas if it pushes down much further, gets on the wrong side of that prior broken trend, gets under that range trend, gets under that break level, if it gets under any of that stuff down there, it's not going up. That's just unfortunately how that works. Okay, let's have a look at the totals. No, sorry, safety assets. Yeah, this is just classic, cannot make up its mind. So we opened up underneath the trends. We have the resistance there, which is rejecting. So it is doing what it's meant to be doing. That 67, what is that? That 67.91% area there has created that rejection. It looks like it even tagged the next level up there at about 68. Now what we want to see is we want to see it pull back down and not create a hold level, be under the trend again, and then it could push down. But yeah, opening here is a perfect place to bounce up because it's above the range trend. It'll be breaking, or it'll be in a position where it can on the next candle break and hard close the downtrend, and it will once again have held the support, which has been traveling up for quite a while now, ever since the bottom of our mini alt season that we kind of got. So yeah, we really just want to see that pulling back down before the end of the day. If it doesn't, expect it to have another push. It still has resistances in the same places, which it hasn't broken yet. It still has a range trend that could send it back down again. So yeah, it's really just not giving away much. It's sort of saying, like yesterday it was saying, we're going to dip. And then today it's saying, no, we're not. So it's just really indecision. If you grouped all those candles together, it would just be one big doji. Okay, so on the weekly is going to be, if it closes anywhere around here or lower, it's still going to be on the wrong side of the trend. So it could come up, tag, and like we said yesterday, although it's quite subtle, this candle has not actually made its way back to that break level. So the next candle, if it did go up and hit it, could dump, and it could be a decent dump because it'd be a weekly level resistance from the wrong side of support trend. So that could send it all the way back down to the 66s. But yeah, at this stage, it could also close up. So if it pushes up above that 68-ish level before the end of the day, then it could end up being on top of that trend, in which case it's going to smash up and go higher. So it's right on the fence of pump or dump. Okay, now let's have a look at those totals. Yeah, so with 2 hours and 24 minutes to go, we are positioned just underneath the range trend and under the downtrend. So with a hold level above. So this is pretty much about the worst case place you could be for a daily close. The only thing even worse would be if you were below the 1618, which we're not. So we have got a prior trend running through here, which we haven't lost. And we have got a break level down here at 2.78. So yeah, it's not a great place for a candle to be. Ideally, you don't want to see a hold level for one. You want to be back above the range trend for two, and you want to be in a position where you can actually clear the next candle on the other side of this downtrend, which none of those things are going to happen if the market stays at this price. The only positive thing that could come out of this is that this trend that's up here above is going to shift to the bottom of this candle. So if there is a decent sized wick on the bottom of this, it could bounce the trend and try to push up. So closing just above the break level, shifting the trend to the bottom might give it a chance of a rally. We are hard closing the origin resistance level up here at 2.96 trillion, so that rally could also just be a retest of that, and that's about the most bullish bounce that I would even consider banking on at the moment, because nothing is bouncing to its full capabilities. Most of what we're doing at the moment is we are finding the absolute closest point of resistance and just rejecting again, which doesn't go forever. It's usually a means of speed. They're just trying to get to a destination quickly. If only we knew exactly where they want to go. We know the levels, we just don't know which one they're going to reverse on. So probably the only other thing to check is, yeah, we have performed the minimum bounce of that whole candle that's back here from June. So that was the market moving from 2.87 up to 2.95, so that's been completed as a minimum bounce, and that's kind of what I mean at the moment. Like, there's a minimum obligation for the market to actually pump up a bit when it hits that, which it did, and it didn't go any further, didn't retest the trend, didn't go up to any of the other horizontal levels. It just literally did the minimum that it had to. So yeah, that's what bearish price action looks like. Okay, how's the weekly? So, yep, the weekly trend is going to break today. It's going to shift to the bottom of the candle. The wick is just too short on the bottom of the candle, so it's basically going to open on the wrong side of the trend from the looks of that, unless it has just a bit more of a move up before the end of the day. So, yeah, this is also pretty bearish. So they may just try to keep it here, this sort of market cap level, so that they can open on the opposite side of that trend and just reject off it as first resistance. You may then get a little bit of a bounce off the one below it, but basically it's just like sandwiching it in between two trends. And we're still under the downwards range trend. There is potential here to move back up to 3.04 on the weekly. Or 2.88. Just 2.88 would be kind of your absolute bearish resistance. And as it would be approaching it from the wrong side of the trend, it would just be very, very good reason for them to reject. If they do close up above the 2.88 for the day, then they may use it as support again to try and shift up. The other level is this level down here, which is 2.79. So this is all based off the range that was created by this candle all the way down here, where we got the full engulfment of multiple levels, and then we bounced off the range base to travel up. So we are heading back towards that range base, which is that 2.79 trillion. So it could find a bounce there, but the reason it seems so bearish is, if they wanted a bullish bounce off that, they would have just gone and hit it, and then it could have gone up. You don't move trends into a position where you can open on the wrong side of them and then go hit it, because then it can be restricted by not being able to get back up past that trend. So it's how to break support levels 101. Okay, let's see what we got on alts. Yeah, so the alts have bounced the trend. They're creating a hold level. It actually looks, the one day on the alts do actually look a little bit more bullish to compared to BTC, but still it's going to, if it closes below 995.33 or below 1 trillion today, then it's still going to have a hold level and more resistance. Doesn't look like it's trying to create, no, so it's not trying to create a range here at this stage. So it's but until it breaks the downtrend, it's still in a downtrend. And so the weekly. Okay, so yeah, the weekly. There's a couple levels there on the weekly that could bounce. I mean, for one, it is. So this is altcoins versus Bitcoin, right? Like Bitcoin, everything it's doing is super bearish, and therefore the overall total, including Bitcoin, but minus stables, looks quite bearish. But when you look at the totals with Bitcoin excluded, it's like the altcoins have just had enough punishment and they really want to go up. But so this isn't quite tapped the trend again like it did the last time. It's going to open the next candle above the trend, so that could bounce. There's a break level here at 1.02, which is closed underneath, so that would sort of be your first bearish resistance. The downtrend is quite far away, the weekly downtrend on altcoins. Like they really could have a pretty decent weekly rally if they wanted to, so, or if Bitcoin let them, but it just doesn't seem that that's the game. So okay, let's have a look at Sol. Yeah, so even as we speak, Bitcoin just wicked down, creating a lower low on the 1 minute with I think it just went down and tapped 93,300 and something. Meanwhile, Sol has not created a lower low on the 1 minute. It's still, it didn't even drop below 135.2. So it's yeah, definitely this is a Bitcoin bear market right now, with the alts actually looking a bit stronger. So that can change anytime. Obviously, don't go and invest your mortgage money in altcoins. But on the 1 day here, what are we doing? On the 1 day here, we're still kind of bouncing. So there was a 1 day origin level that it bounced off, which was sitting here. I'm just sorry, I should have put a label on it. There it is. So 134.535 was the 1 day origin level. Now it dived through the trend to tag the origin level. So in any normal price action trading scenario, that is a perfect buy. That's a scalp buy. It dives a trend, it tags a higher time frame hold or origin level. It can be break level retest. It can basically be any horizontal. So it dives through a diagonal level, hits a horizontal level, perfect touch entry, up it goes. But it's just not bouncing, not quite the way you'd expect it to bounce. So I think Sol is just showing that it really does want to rally, but which is evident because of all the shorts. Like it just, if it had a personality, it would just be chomping at the bit to go and eat those shorts. But until people get bearish on BTC and until BTC bounces, it's not going to. It's just going to either continue to fester or it's going to start to break these levels and keep moving down along with BTC. So we really want to see the daily close back up over these horizontals. Ideally, we want to be back up over the hold level. So a close over 138 or 139 would be a really, really bullish close, ironically, even though it just looks super bearish, because it puts it in a position where it can be on the correct side of the trend to move up. It means that they've intentionally gotten rid of a hold level instead of creating it. And it would be more in line with the type of bounce you should get when you run into something like a daily origin level, particularly through the trend. Now, a really bearish close would just be where it is now, because it's going to open on the wrong side of the trend, and then it's going to be well and truly clearly under the downtrend still, and then it's going to use all of those resistances and be able to break that support level, and then you'd expect to see it traveling down to, you know, the 130s, or you got a break level there at the 130, and you just don't really have too much. Once Sol loses this, there isn't that much until you get down to about 120 on the daily, or 119. I mean, you've got a range trend at about 126, just a normal break level, and then you're down into a hold at about 120. So yeah, this is definitely it's a nasty downtrend, as you can see the steepness of it. It just needs to get one candle in the right place basically to be able to get out of here. But I think overall, don't bank on this reversing until BTC clearly reverses, and even then it's going to take it a bit of time to be able to get through these trends. So okay, let's have a look at the 2-day. Yeah, so 2 days rejecting. It may have a range trend support. I say may because it's based on this October 10 scam wick. So don't just go for that one, but maybe at about 132, 133. And other than that, it's got a break level to retest at 122, which it hasn't done a retest on. It's got a break level that it might hit at 123. It's got range trends down at 120, so most of the support in this case is down at a 120 area. If it was to have a fake out rally to the upside, it could be between the 230 and the 245 area, because this is actually creating a range, because it's hard closing below that 145 based on that whole candle at the top there. So, you know, if you get back to 145, just consider that as potentially an exit. I wouldn't bank on it going too much higher than that. The other thing is that the trend shifts to the bottom of the candle today, so that could give it a means of bouncing, but the actual target for that trend shift is 155. But yeah, as I've said previously, just don't bank on these targets fully playing out, right? Because yeah, BTC is just a naughty token at the moment. Okay, so looking at the 4-day. So 4-day has some very old. So this is now, welcome to the beginning of the pump. So back when we were at $17, this is the range trend right here, and it's about 133. Okay, so could that bounce? Yes, it could. Could it work through it for 4 days and then bounce? Yep, could do that too. We've got another one sitting here at about 130, which is more of a local one from May. And the 4-day is on the appropriate side of the downtrend to bounce. And if we have 4 days to the upside, then it breaks that trend. So obviously 4 days to the upside would also mean 4 days of working its way through those daily trends on the daily. It's all the stuff kind of works together. If by some absolute miracle this thing pumps up and gets over 141.350 for the day, then that's really bullish. It genuinely could happen because there's so much liquidity coming in here now. Like, just looking back at this, you know, we've got, yeah, all of this all the way up to about 144 has all come in quite recently, like since what's that, Sunday 1547. What are we now? We're Sunday 2155. So in that period there, everything has come in to allow them to actually close some of these closures better. But yeah, just have to wait and see whether we get a pump in the last couple hours or not. Yep, failing that, like I say, 130s maybe. 133 maybe. Is it creating? It's right on the fence. So yeah, if it closes under 136.241, then it's also capable of creating a range off that, which means it could reject down to the second level, which is that 118.559, and then down to down to 100 is the third level, and 83 is the fourth. So this is really looking like it's time to make or break. Okay. Okay. So what I just said about the 4-day, just see this example. We started building some kind of range from back here in 6th of April. We hard closed under this 160.757 level. We went up and rejected off it, and then we traveled down to the 135.729 level. So this is now a case of, does it stay inside this range? And if it does, then it could come back up. We're not hard closing the trend. We're not hard closing the break level or the range trends. Maybe it wicks down. There would be some kind of support in the base of the hold down here, which is 120. So yeah, you should be able to see a move from around 120, 121 up to about 135, 137. But this can also kick in a rally. So exactly where it is right now, assuming people give up, they stop longing, and they want to reverse this, it can bounce off just exactly where it is, and it can go back up to 160. So that's kind of sitting right in that right sort of place right now, which is, yep, it's kind of in the middle. Okay. Looking at the 8-day, so the 8-day is sitting just below its break level, so that's really bearish as well. It needs to at least get up above that break level, which is sitting at 137.082, and ideally it needs to get back up above that high time frame support of 141.350. And this is this is an 8-day origin level, and it's not bouncing, which is just shows you how bearish things really are right now. That's very, very bearish. Okay. The 10-day appears to be in range rejection, so it's probably still looking to come down lower. It'll hard close. It could. Sometimes what happens with these range moves is they hard close, the trend shifts to the bottom, the trend bounces back to the 159 price, and then it rejects and then comes down to the 131. So again, that could be a rally. Some of these numbers are so close together as well. Like if you try to TP at 160, but you've got a slightly higher time frame that's 159, you might not get your 160 TP. It might just hit 159 and then come back down again. So just be very, very conservative if you're going to try and long any of these bounces. Okay, and looking at 16-day, it's underneath its break level as well. It's underneath its range trend. Yeah, it needs to go up. It's got support, prior tested support, which led to a new high at 127. So that's a pretty valid area where it could bounce. And then 120.646 below that. Yeah, if it was to bounce, 155 through to 169 would be definitely the target range. It wouldn't be, wouldn't expect it to go any higher than that. Okay. So the 20-day is going to be on the wrong side of a prior broken trend. If it closes here, it's going to be on the wrong side of the current uptrend, which if it retests the uptrend, it's about 153. If it retests the prior broken trend, it's about 139. It's just absolutely this is capable of just an insta dump, just tap, go up $2 and then drop sort of move. And it's in a position to create pretty much a token ending range if it rejects off that 159.8, because then it's 104 and then 48 and then negatives. So that's a bear market. So that's a pretty nasty looking close. So this is where that scam works. So this October dump does not appear like that on every chart, and it is possible that the range trend is going to be lower. If it is, it could bounce the range trend, and believe it or not, it could head back up to 172. So how's that for a time frame that basically is saying you could end Sol or go to 172? Love it. Okay. And the 32-day is still up inside its range trend. It's still inside its support trend. It hasn't hit its break level. It has high time frame support sitting at 127. So, this has got the ability to bounce back to 175 if BTC would just have a rally. Now the candle's going to open on the top side of all of the support, and yeah, it's this is the type of move I would typically want to take a really gig along on, but it just, at this stage it's just a case of let's wait and see if we actually start to even just get through probably a daily trend before we start to consider something like a 32-day move. Okay. And the 40-day is just hanging in the middle of nowhere. It has the ability to create a range if it rejects off 152, which it definitely can. And if it doesn't reject off 152, it has the ability to go up as high as 190.7. So yeah, some pretty big stuff in play there. What else we got? 64. There's so many closes today. 64-day. Okay, so it's going to create a hold level starting at 155 through to 162. There, you might be able to get a short off this down to 112 or down to 101 if it goes up. That would potentially even come down and retest that range trend, which is pretty bearish, down at about 90 or 81. Yeah, that's a very bearish candle. Very, very bearish candle. So there's not much that I can see in there that's actually going to be able to save that, aside from the fact that there is that prior broken trend. So if it just pulls up a little bit, closes up around the 140s, or even 138, 139, it could bounce off that prior broken. So it's pretty nasty. Okay. And the 80-day is going to create a range trend, but at this stage it's on the wrong side of it. So it could just open and continue down. It could go up to maybe 141 and then reject off the back side of it. Yeah, it's pretty average. That's pretty nasty. It's failed to close below the 1618, so it may bounce between 126 and 161. Such a big time frame, it can sort of push through trends, etc. Like as you can see with these topside candles here. They went right through the trends for quite a long time. So yeah, it could still have a bounce in there, but it's pretty bearish. Yeah, and this is just, when you get into this kind of thing, all you can really look at is the trends, and we've got a 120 here, and on the top side we've got a 210. So that's the full range of that flag, or whatever you want to call it. There's a first touch test of this trend at around 121, and the rejection trend is about 210. So that would be probably the biggest rally you could ever expect out of Sol. So now going through the weeklies. The weekly is below its support trend. It's below the origin support level. I mean, basically, if this does not close up over 142 in the next few hours, it's in a world of pain. So it's just, it hasn't hard closed anything, which is why it's impossible to say to people, look, it's going to go to zero from here. Like, it's because you can go below a trend and then come back up, but the probability, given the current price action and what we've seen over the last couple of days, is that they can just either continue to dump down because 120 is the next support level, or they could give a little rally, bring some more longs in, and then reject off any of these levels, including 137 or 141, and then go down to 120. So, and 120 has actually already been tested before. It created a bounce. The bounces that will come off it typically won't be as strong the next time. So we've got a level that's been untouched down here at about 109, and then we've got another level that's been untouched down at about 100. So they're more likely to actually be able to turn the price around. But yeah, it's looking very bearish. Just watching on my other screen as BTC is continuing to move down. So it's about 93, 100 now. It's taking all of that 25x leverage. Okay. 3-week. Yeah, below trends. It hasn't hit the break level yet. It's got supported about 126. But yeah, it's pretty bearish. There's a range trend through here, which has been retested, but you really cannot be bullish on this chart unless the candle magically comes back up above 151. Other than that, it just looks like it's on a complete dive to try and liquidate as much as possible. Okay, 5-week, same sort of thing. Support level is at 120. It's powered through that range trend instead of bouncing back to the hold. So yeah, it's pretty bearish looking time frame there. So closing back up over 152 would be good, or anything above the range trend, 148, 149, really requires a rally in the next hour and 54 minutes. Otherwise, I'd just say that, yes, it can go back up and push back up through that trend, absolutely, but do not be taking high risk on that because, this is definitely looking like there is intention to push down. Okay, so this is give you a bit of an idea of how messed up price action is. So this move created a range. It should have, just see if it's this candle here. Okay, so it closed above the 1618. The next possible steps, and this is, I think, why there's so much confusion at the moment. Like, depending on what way you look at a chart, Sol could have, at this point, gone 287, and we had that level on many of our, there was actually fib targets, etc., up to about 286, 287, then 349, and then the top of the range 410. So that would have been the end of the bull market up there at 410. But it pretty much ran into this 9-week origin level and just said goodbye. and just has dumped. And you do sort of expect these levels to push back and try to find support. The support could have been 173, which it hasn't actually hasn't used as support. The next support could be the trends and the range trends, which is these levels down here in the 146s. And as you can see, we're currently pushing through that. And then the next support is this level down here at 126.96. So yeah, the amount of sell pressure that is in that candle just to push through everything that you see there without any bounce is huge. There's definitely, they're on the go. They're on the go for something low. As far as the implications of that, it basically makes anything above 155.83 through to 161 into a hold level, which then, if that hold level gets hit, could take you down to 97 or 106. Okay, so that's, yeah, very bearish close. And then we got a 15-week. So we have got a 15-week trend here at 120, and we are potentially going to have a hold level at 137.780. So yeah, you're capable of more or less an instant dump when they open that next candle. Now, the next candle technically opens above the trend. So there are scenarios where this is what breaks a hold level, is when they create it really close to the support trend for the first touch, and then it just taps it and then reverses the hold level. But given that it's such a big time frame, you don't know whether or not that reversal is really going to play out for very long. But it could, so it's, you could either say we're really bearish right now and this is the end of Sol and it's going to go to 95 and then 26. And there is some scary confluence because 26 is the untouched hold level down here at the bottom. So very, very, very possible that Sol goes back to 26 in the bear market, just purely based on one candle and one fib, which plays out 94% of the time. The other side of it is it hits this and flips this. And that's hitting that 132-ish and bouncing to flip this candle over a long period of time and push to the upside. So yeah, looking at those levels, they don't really have too much confluence past about 210. So yeah. Okay, so let's have a look at BTC. So first glance on the daily, it's going to have a hold level. It's pushed below two origin levels. I mean, it barely bounced off them. We did get a bounce, but it stopped at the absolute first resistance, like we talked about. And the next step is 88.5. Really, there's not. If it closes here, there's almost zero chance that it doesn't just take a complete dump down to the 88s. Assuming it's not already there in the next hour and 48 minutes, because tell you what, the sell pressure is just relentless at the moment. Okay, so looking a bit higher. Yeah, so there is a chance of a rally in the 2-day. So trends could shift to the bottom, but the problem is the wick's not big enough. So at this stage, it would open just pretty much on the backside, and it could dump. It's also just below the break level here, so that would typically mean more dump. And if it closes below 92.778, then it's going to try to dump down to 87.491, so that would just mean more dump. There's also an origin level retest to be performed, sitting down here at 88.253, so there's more of a reason to dump. So, and then there's another one down here at about 80. 86. So there's a lot of reasons to send a wick down there. It could be now, tomorrow. Um, we're getting more people are starting to short BTC, so that's slightly positive for a rally before the end of the day, but it's yeah, certainly this thing is on a cliff. Right. 4 day. So we've hit the 4 day range trend. We haven't bounced. That's not a good look. So it may create a range rejection from 95,470 down to 89. It may reject straight off the backside of this range trend, just where it is now at about 93,500 if it doesn't pull back up. That would be a bear case. You've got support down at about 84, 85. But yeah, it's pretty horrible. The whole base for this entire move is this level down here at 76. So, don't be surprised. If this was to recover these levels and close back up over 94.85, then yes, it could give you a bit of a 4 day rally. So there's a bit of confluence between the 4 day on BTC and the 4 day on Sol. So maybe there'll be a rally in the next 4 days, or maybe a rally that goes for 4 days, if it closes up. And I just wouldn't expect it to go too much further than 98 or 101, just looking at that structure. It could, just because it is not technically a hard close, if it got back up in the next 4 days and got above these levels, yeah, it could push through to 106, 107, but yeah, you'd want to see a whole bunch of bullish tweets or narrative or weird stuff coming in, for that to happen. At this stage, it's close down here is pretty brutal. Okay, we're really close to tapping the range trend on the 5 day. So that's about 92.7. The high time frame support here is just sitting on it at about 93,456. So if they just stay here and just stick around this area for a wee while, it's because they want to open underneath this resistance and then try to break that support. We've got retests that need to happen or should happen down at about 91,254, and we're close enough now that they might as well do that, get it out of the way, just even if it's a wick. But it'll be, how do they do it? Do they close up above the support today, wick down, tap and pump? Trends are going to shift. Well, actually, they're going to break. These top trends are going to break. I don't think, yeah, the other one's not going to shift, which is a bit of a pain. If it does bounce, the hold level's back up there at about 99. So anything between 99 and 101 is going to be resistance to this recovery. Okay, the 8 day, which is about to run into its first support when it hits 92,505. It's going to lose the top trend. Yeah, it could reject against this 95,573 range resistance, but it hasn't hard closed it. It has hard closed the 106, so if it went back up, it would be, 106 would be as far as I'd expect that to travel. So that's and if it did do the most bearish of bounces, it'd be sort of about 96. Yeah, I'm trying to figure out what they're actually up to here. So most of the bulk short liquidity, if they're going to do a squeeze, starts at about 96.5 and goes through to that sort of 101 sort of area. And that's the kind of liquidity that can break or bust through trends, because once it kicks off, it just gets The squeeze of the short liquidity offsets all of the pressure that's going to sell on those trends. So absolute most bearish scenario is it's going to come down to 73 to test this range trend down here. So that's here. Okay, so this has got a retest to complete down at 88.741. So it's given it's just hanging below a trend, it's quite likely it's going to go down there. Also, it roughly lines up with level 2 of the range if it's trying to create a range, which it looks like it might be. So it's resistance at 99.7 and next stage of the range is 89.418, which would allow it to do that retest. If we look at the range in reverse, the one that's actually currently in, then that means 88.5 is a support, which could push back to 97. So that's, and yeah, 82 is the final, 82.517 is the final part of the hold. So looking pretty nasty. Okay, 16-day has not quite hit its range trend, so it's got this range trend support just under that sort of 92, 600, 700-ish. So they haven't touched that. The thing is, it's on hard closed. This is kind of what I don't get. BTC should bounce. It really should. And it should bounce to 107. It's like they're just doing everything humanly possible to either get people to capitulate or delay the bounce or do as many retests as they can to the downside. But it's yeah, it's bending a lot of rules by not bouncing from 95 to 107. So something's up. And I just look at this liquidity, and I look at the top of this liquidity, 106, 106,900, 107-ish. It just, why did it not? I think it's just purely waiting for people to give up. Right. Next. Same sort of thing. This should be trying to move from 97 to 108. Instead, it looks like it's trying to stop that from happening. Yeah. So closing down here is going to be below a range trend. It's going to be below a range creation level. It's going to want to dump to 80K. And the only thing that would really save that would be a short squeeze back up from the underside of the trend, in which case it's going to go and target 108. So, yep. And this is just within dollars of a potential bounce. So the 32-day on BTC could bounce anywhere from 92,780, and it went to 92,984. The other level would be 90.560 and below. And you see, this is the kind of bounce that should be happening based on some of those other timeframes. You've got a hard close range level. You bounce and you can wick into it, and then you move up to the next range level. Now we've got a hard close range level to the top side, and then we didn't actually test it, we just went, and now it's just gone through this level, which is a hard close level, without bouncing. So it's just very strange what it's up to right there. There is actually a probability that this thing can bounce from this level and go all the way back up to 119, which is kind of not what people probably think is going to happen, but it's definitely in the list of possibilities. And the trend shifts to the bottom side today. Wick's going to be in a bad place. Overall, I have to say I'm probably more bearish than bullish just because I can see so many things that are pointing to the downside, but some of these moves are very high probability moves that it could bounce to the upside. Same here. You know, we're down inside this to go back to 107. I think what it's trying to do is it's trying to create local trends and then be on the wrong side of them so that it rejects. And this, because of the structure, it should be trying to go back to 107, but they're more or less putting so much sell pressure in place that it could just reject off 95 and then head to 76. So that's very, very bearish closing action. Okay, and then we've got this, which should be bouncing back to 103. So why you not bounce? This should be bouncing back to 104. And yeah, it should be bouncing back to 104. And it's engulfing but not hard closing for range creation, which means it could go to 81 and then bounce back to 98, or it could go up as high as that body, which is 110. And you've got a very clean level down here at 70, 69, 70 as well. And that's got a range support level also around that 81 area. So 81, 83 to then bounce back to 104. Okay. And this is this might be why they're keeping the price down here quite low. So 93,570 was a support level for a lot of reasons, but it's also capable of, like any support level, you will find that there is means of being able to flip it into resistance, and that is what we are looking at right now. So if they close the day below 93,570, then your next step would be 82.212, 63.4527, which would be the various levels of the short. Yeah. Or the other way you can measure it is because it's failed to engulf the wick of the candle. If it tried to create a range, it would fail to create a range, which means it would go to 74 and then back to 93. So that's looking at the weekly. The weekly is just hovering above the range trend. So it's done that retest. It's just sitting there. If it was to move just purely based on the weekly move, it would look at maybe 95.3, 96.5 to the upside. So none of this stuff is hard closed. So 99, 101 would be the range level, and 106 would be the top range level, and 106 is the only hard close level out of everything. So there's definitely the ability for it to move back to 106. There's also another support level here at 90.759, and then you've got the retest of the broken range there at 88.741. So that's where that's at on the weekly. Have we hit it? No, we haven't. Okay, and then we've got the 3-week range trend coming through here, just a tiny bit lower from where that candle just whacked. So, yeah, it is very much like they are purposely not hitting this stuff until after close, which would give them the ability to work through it for a longer period of time. And because if you tap that just before the 3-week close, then generally the candle would start going back up. But if they wait for the next one, then it could wick through or it could go back up. But then because it's underneath the resistance, it could stop at like 95 and then dump again. So it just looks like it's been set up to fail. The hold levels could also reverse, so you could actually end up with 96 as a resistance level, or 99,425 as a resistance level. It looks like it's going to try to create a 3-week range to some really low number, to 46. And if it's going to do that, it's going to try and reject off 97. So that's pretty brutal. Okay. And then we start to get into some of these timeframes that really should be bouncing. So 83 should bounce to 104 if it goes to 83. Likewise, this whole candle in here, which it's in now, should bounce to 108. But it's not bouncing yet. And I think it has, yeah, and it's gonna have a failure to create a range based on this close. So that means that it could go 86 and then bounce back to 101 or higher. So yeah, that's okay. It's going to have a range trend form between these candles, but the range trend is going to be pretty useless because it's going to open on the wrong side of it. It's under prior broken trends times 2. It could push to 104 just as resistance, but it doesn't really have to. It could reject off 97s. It has hard closed 83. So this candle up here was the hard close of 83. So it could bounce from 83 to 104. It might work through, hit the trend. It's about 78. But yeah, that range is looking pretty bearish. And this is about as big as it gets. So this, if we'd hit this trend earlier, we could have penciled in a move back to 113. But at this stage, I'd say that there's a bigger chance that this entire thing is going to fail. What it might do is it might hit the trend down at about 88, and it may bounce back to either the body of the hold, which could be converted to a resistance, because you can flip these, like if the candles close under them. It could go back to the wick, which is 109.988, or the most bearish scenario is because it's going to open roughly here if it doesn't go up anymore before the end of the day. It can come up here, tag about 95, which would be the backside of the trend, and then it could just go on a free fall because there isn't really, there's nothing to catch it until it comes down to probably a break level, which is here at 66. There's a prior broken trend to be retested that is a very hard to see little dotted line there at about 74. Yeah, so it's pretty nasty looking price action. So All right, that's BTC. So summary-wise, most of the structure looks very bearish. Um, there are, yes, there is definitely structure in place for a kind of bear market rally. There is even some structure in place to take out the all-time high. The risk, though, at this stage is that the majority of things are pointing to the downside. We need to start seeing intention. And intention is when you're on a level that can be really good or really bad, and then just before the level becomes relevant, e.g., just before close, there is a little rally or there's a little dump, and the price in position to that level is then made into something that actually is tradable. And so for the next hour and 26 minutes, everything is noise. The one thing, if you wanted to be bullish, is that they are making it look really bad in this hour. The price just looks disastrous. It just keeps dumping. But if you look really closely, you've got Sol not making lower lows. Only Bitcoin is, and Bitcoin's now starting to get shorts coming in. And that sort of says to me that maybe this whole thing is just trying to induce the shorts. Because whoever is opening a position into these liquidations, they're going to want to sell it, at some point. And the way to sell it is to push the price up. They're probably not going to hold, $93,000 Bitcoin and take it all the way down to, some bear market bottom if there is going to be a bear market. So they'll want to buy it at 93 and take it up and sell it at 95 or 96. So once that liquidity gets in there, then maybe there'll be a little bit of a move up. And then tomorrow's closes, it'll be a case of whatever the levels are, daily level, 3-day level, do they push it into a positive position or a negative position again tomorrow? And everything that happens from the start of the candle to the end of the candle is about making people open a position, and then everything that happens right near the end of it is basically the intention. So it's kind of the way I'm looking at it. Let's have a bit of a look at Tesla. So given it's a weekend, nothing's changed. They are in a position to reject from 41508 if they want to push back down to 383. If the candle opens above that, that would mean that we don't have a close down in that bottom area, and it's more likely to try to push back up. Looking at the, that's for the weekly anyway. Looking at the daily, it's pretty much just pushed up yesterday, but still technically under trend, still technically under origin resistance. So it really just comes down to where the next candle opens. It's quite sort of hard to trade stocks. Someone tell me in the comments if there's an easy way to tell where a candle's going to open on a given day, like looking at pre-market, post-market, whatever it is let me know, because I don't really trade stocks. But if it was to close back up above the 411.43 level, then it is going to try to push up. But yeah, it's in the same world of pain that most things are at the moment, where they're stuck under multiple arrays of parabolic downtrend. So once it lost that level at the top there, it's going to have to then get through all these trends to get it back. And at this stage, it looks pretty, well, yeah, it's hard to say until the next candle opens. If it opens lower than these trends here at about 392, or if it opens under 387, it's just going to be continued move to the next support levels, which are 367, 364 below. One of the main issues here is it just pumped up so quickly there, and it left all of these levels for retests, which particularly this one, which is this 354. So normal break levels are just about always retested eventually. Origin levels are pretty much nearly always retested. It just happens. So yeah, that's your 354 level. So it's probably at some point in the future going to want to go back there at least, which would sort of be like heading to that 351 on the weekly range. Yeah. Okay, that's it for Tesla and everything else. Hopefully it helps a bit. There's no real clear sign of reversal yet across anything, but let's just see how this next 1 hour and 23 minutes play out and see whether they give us any kind of signs. Alrighty, catch you later.